Hey Frank, these pin bars, they're great for price action trading and that because they show you reversal points a lot of the time, but you got to take them in context of the situation, where they are, the location. So you got to try and get confluences. But I can tell you that pin bars, they're strange in a way because sometimes they work, just the littlest ones, and then other times you get a huge pin bar and it just doesn't work. But here's some situations here. See here, this little pin bar. This is actually reversed a big trend here, just this little pin bar. Now the thing is, you're going to trade that. You're pretty lucky, I think, to get these sort of pin bars, this sort of reversal, these pin bars. But what you got to do is look at the confluence. So that pin bar, where is it confluencing with? Here, it's confluencing with these upper support levels here. So you could say, hold it, let me mark this up. That area there, this sort of area of support. This area of support here, or demand, it's come down, it's hit the demand and bounced off there. So you got to look at it in confluence of situations, or it could be just a basic support resistance line. So here you could say, look, it's hit that support there, support resistance line. It's come across here, support. Resistance, resistance, and then it's become a support here. So you've got to look at it in confluence of other scenarios. Also, you could put a trend line to that. You could that there at the time that would have been the trend line there. That would have been a trend line there, so it's bouncing off the trend line because that would have created the last drop, but then it's bounced off again. So what you got to do is get confluence with it, so that the support resistance line, a supply demand area, confluence with price. So you got to look at a pin, so that little pin bar reversed because of that. And then you got situations like, let me see, trying to find a good pin bar, big one. There's a pin bar there, but no, that's no good again. Here, this pin bar here, these are good pin bars because they've got nice long wicks on them. But the problem, you've got to take it in context. You've got a huge move coming down. Look at the size of these bars. You've got these massive bearish bars, and then you've got these little pin bars which don't really go in context with the size of these bars here. So if these are gonna work, what you want is a bit of congestion, a bit of a build up of price. So let the price settle, and then let it reverse out. Don't just straight away 2 bars bang reverse. So you can see how it failed here. And the only reason it failed because there's big momentum going down. But and then here, look at this little pin bar worked beautiful. Only because this supply area, this is the 4 hour, this is the demand area here. This blue box, that's the demand area on the 4 hour. So obviously there was strong demand there, and there could have been also confluence of a support and resistance level back there. And again, see this pin bar worked beautiful because it's off the same demand level. So I'm assuming that demand level is pretty powerful if you go back in the chart. But if you look for those, it's the same as the bearish bullish outside bars. You know, I said look for those in confluence. See that's a beautiful bearish outside bar, but look at it fail because it's bang, it's coming towards this demand area. So they don't always work. So it's better try and take these bars where there's space for it to move. And here, look at this beautiful, this bullish outside bar. This is beautiful because it's in line with the trend. The trend's going up. It's going up. This one's in line with the trend. This one. But bang, it's gone straight into this demand area. But the problem with trading, you've got to just take every trade as you see it. If it looks good, take it. Because you've got to remember it's a risk reward, and you've got to go on what's a winning trade. So at times this will work, other times it'll lose. So you've got to take it in context. Out of 100 trades, will this work or will it fail? Same with this. This might have failed, but out of 100 trades, will it win most times or will it lose? So you've got to take it in context. Take as many trades as you can and see if it wins. And also the time frame. It doesn't matter if just say people look for a close of a bar on a 1 hour. If it doesn't close at the area they thought, why not drop down to 5 minute and get the entry there on the 5 minute instead of waiting for the next hourly bar? Why mess around? Just wait for the next 5 minute trade. Take the trade from there. Same here, but look at these little pin bars here. This little bit of congestion, this turned this whole big up move, just turned it like that completely. And look at that, just these little bars turned it. So you got to take these as you get them. But if you get pin bars, get them in line with the trend. And also look for wiki bar. If you get these wicks are pretty powerful in themselves. You can see just looking at strong wick, big wicks are actually reversing them up. So they're not just a pin bar, the wicks at areas. It's like a reversal. It's telling you it's going to reverse. Bearish outside bar here again. That's this big bearish outside. It's in line with a big trend. It's turned out. But again, it could have failed because look at it. It's hitting that area. Support resistance here. But you just got to take the chance. And that's why you don't want to put too much risk on every time. Just put anywhere from 0.25% or up to 2% of your capital on at risk and take the trade from there. Same here. See this wiki bar? Look at that. You could have virtually entered on that, and you would have got yourself a few pips here. There's 85 pips there, just on itself there. Wiki bar here, bullish outside bar, bullish outside bar in line with the trend. Take the trade. That's the type of bullish. That's a bullish outside bar again, in line with the trend. Take the trade. It's breaking out of congestion. This is the congestion area here. It's breaking out of congestion. It's closed above the congestion. This one, the wick's gone in, touched it, wiki bar, bang, it's knocked it out. It's not a pin bar, but it's a wiki bar, long wick, bam, sent it flying. But you got to take all these bars in context of the situation and just flow with it. Again, little pin bar, bam, straight up, little pin bar, but look at it, it's in line with a big, huge trend. Took the break of the pin bar, you're in. Here it failed, like I explained before. This one worked in line with trend. Okay, if you got a stop loss there, 60 pips, you got a profit 45 pips. So when you got a bar like this, you're not sure. As soon as you get a profit of like 10, 20 pips, quickly move your stop loss up to break even. So at least you're not going to lose your money. Same with these. These pin bars failed, but you got yourself, 23 pips. As soon as you got a profit of 10 pip, maybe, if you're not sure of the situation, a bit risky, quickly move your stop loss to break even once you're up 15 pips, so, or 10, 15. So you've got to have all these rules. Nothing's hard and fast with these rules, but look for wiki bars and see when you get two bars like this, you've got a bullish bar, straight over reversal, bearish bar. This is classed as a pin bar because this is a 4-hour time frame, but people put that together as an 8-hour pin bar. If you bang them together, imagine that's a pin bar. So look at that pin bar there is reversed the market like that. 90 pip profit, stop loss up here, 75 pip. That's a 1-to-1 risk reward. So you got a nice profit there, 1-to-1. That's just somewhere. Hopefully that's helped you out a bit. Okay then, cheers mate, bye.